Yo, 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 what's up, ladies and gentlemen? Welcome back. Happy Taco freaking Tuesday, ladies and gentlemen. Good morning. How y'all doing today? Hopefully you guys had a blessed evening, and I hope you guys are ready to rock and roll for an amazing session today. So here in a moment, we're going to dive into it. But first, you guys know the deal. You got to hit me with a big old good morning, everybody. And I mean everybody. And until that happens, I ain't doing nothing. I'm just going to sit here in silence. Nah, I can't do that. If I go more than like 5 seconds without talking, it feels awkward. So I'm just going to keep going. Tom, what's up, buddy? Good morning. Mike, Steve, Jake in the house. The Sizzler, what's up, buddy? How we all doing today? Welcome back. I think we're good. We are live everywhere. So, all right. Just want to make sure that we are all set. Give me a thumbs up. Give me a quick good morning. Want to make sure you get the streams live. You guys are tapped in. We are all set. And we're going to dive into it. Well, ain't that just weird? Well, you know what? We're just going to go ahead and dive into it because we only have an hour until market open anyway. So right now we are on the SPY Daily. Let's go ahead and just rip through the SPY and the Qs because I want to have some time to discuss Tesla. Tesla looks good today. AMD, I think AMD is going to be setting up for us as well. We got a possible swing trade on SMCI and a possible short-term little swing trade on Disney. So we got a couple things to discuss today, guys. All right, so we're just going to rip through the SPY and the Qs and get you guys prepared for the day. So as always, starting on the daily time frame, doing supply-demand analysis, support resistance zoning, anything else that we see that stands out off the daily, find the key zones, drill that down to the lower time frames, and get prepared. But we already know there's no supply at all-time highs. There's no supply in this region, so we're really just working support resistance zones. So right on the daily, what do we got? Well, we got this daily zone right here. And that daily zone is between 599.15 to 599.70. A lot of resistance, hit support, big pop, high a day, reject, low a day, bounce, high a day, big old drop on off. So that's going to be a very key zone for today on the SPY. If you take a look at the SPY, what are we doing? We are grinding that zone here in pre-market. So looks like we gapped below it this morning. We had a little bit of an open lower, hit that zone as a resistance, dropped on off, breaking back above it, coming back into that zone, holding it as support, and we're starting to see a little pop to the upside. So that is going to be... Is that our lits? It really depends. I mean, it's a pretty key zone. But where is your next zone to the downside? Your next zone to the downside will not be until you get down around 597.31 to 598.02. Right up against those highs. We hit it last week, Tuesday, a high a day, gapped above it on Friday, hit it as low a day, had a nice little pop. So that's going to be your next lower zone to the downside. And we're just getting those bad boys dialed in. And then to the upside, what do we have here? Yeah, baby. We hit this little zone here last couple of days back to back. It's a lighter zone. It's got a couple hits on the daily. It's decent. It's between $600.86 to 601.32. 3 days back to back. Top on out, drop it on off. Come up to it. Couple more hits off the zone. Low a day. Bounce. So, I mean, it doesn't have that many hits. Doesn't really have that many sharp, significant moves compared to those two lower zones. But it's still a pretty nice daily zone of resistance. And we just came up to it. Hit it yesterday's high a day. Had a nice little drop on off. So, we need to go find one more key zone to the upside. And we should be good on the SPY for today. Because I don't really expect that much movement leading up to, what, CPI Wednesday, and then we have PPI data on Thursday. So I don't really expect to see that much movement today. But next top zone to the upside is between 602.15 to 602.50. So that gives us two dialed in zones of resistance and two dialed in zones of support for today. Let's go ahead and take this down into a lower time frame, 4-hour time frame, and let's do some lower time frame supply demand analysis and see if we have anything else. So do we notice any 4-hour supply or demand? We do not. Let's go flip that down into a 1-hour time frame. Do we have any 1-hour supply or demand nearby? We unfortunately do not. Anything else we notice on a 1-hour time frame? No. Let's go flip her down into a 30-minute. Hey, man, today's looking like it's going to be a pretty simple freaking day. Nothing really popping off on a 30-minute, and I doubt we're going to have too much on a 15-minute. And, yeah, we don't really have too much on a 15. So we got primarily these 4 daily zones to work with today. That's it. So we got our first closest zone of support. That's down between 599.25 to 599.64. We got this top zone of resistance between $600.86 to 601.32. And we're simply just going to trade off the zones accordingly. It's going to be that simple today. So if we come down to this bottom zone and hold it as support with good price action, we'll get long and trade it from zone to zone. If we come on down and fall below that lower zone and we see the retest, simple. We'll just trade the break and retest to the short side from zone to zone. And then same thing off our top zone. If we come up to that top zone, we top on out like we did yesterday. We failed to break it. We'll get short down into our next lower zone of support. And then finally, if we are able to push above that top zone of resistance, we'll just play the retest long up into our next daily zone around 602. So that's what we got, man. We don't have a lot that really stands out. We don't have any daily supply demand. We don't really have any daily fibs we can run. I mean, that's it. Just got to really dial in these key zones and simply just trade off these daily zones once price gets there. So SPY, dude, super simple. There's nothing else that we really see standing on out. So we got those 4 key zones to work with. Let's go look at the Qs and see if the Qs stand out. So definitely topping on out up around like 532. Last few days here on the Qs. And then it's like, where's that daily zone at? I mean, it's a pretty big zone, but it's that zone that we came up to. We hit yesterday, and we saw a nice little drop on off. It's just a pretty big daily zone. And you only got like 3 hits off of it. So you got the zone up here between 531.23 to 532.12. But like I said, it's only got 1, 2, 3 hits off of it. But we're seeing it validated the last few days of coming up to that zone, hitting it, dropping on off. Coming back up, hitting that zone, dropping on off. So that's going to be our closest, most respected zone of daily resistance. Let's go find one more dialed in zone to the upside, and then we should be good to go. Final zone to the upside, resistance. It's going to be between 533.16 to 533.81. Yo, Tom, what's up, buddy? Appreciate you being here, man. All right, so we got our top 2 zones of resistance for the day, and then let's go work our way to the downside and see where our next key levels of support are going to be at today. Boop, 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 boop. All right, cool. Lower zone of daily support. Going to be down here between... I'm just dialing it in. Just bear with me, guys. Just bear with me. It's down here between 528.49 to 529.19. It'll be your next lower zone of support. And we need just one more, guys. Just one more. And then we can flip this down into the lower time frames, get an idea of where we're at, and the types of setups that we may see take place today. So next daily zone. Bop, 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 bop. It's going to be back down here in the 526s. So that is going to be down here between 525.99 to 526.53. Yeah, it's kind of the same thing with the SPY. We really just have those 4 daily zones to work with. So let's go ahead and flip this down into a 4-hour time frame and see if there's anything that stands out on a 4-hour. No, there's not. Let's go down to a 1-hour time frame. Supply and demand analysis. Do we have anything down here on a 1-hour? We do. Look at that 1-hour demand zone that we have down here on the Qs. So we do have some of this 1-hour demand chilling down around 526, and we got that daily zone of support down around 526 as well. So we already know we got some confluence at 526 to get long and play calls. But that's asking for a lot. You know, we're asking for the Qs to drop 6 points down to that lower zone. But if we see price get there, we know it's a great area to play calls. Do we have any supply to the upside? We do not. Let's go finish this off on a 30-minute time frame. And yeah, that's nothing really else on a 30-minute time frame. So we just have these 4 main daily zones to work with today. So we just got to sit back, be patient, wait for the stock to get to one of these zones, and let price action bring us into the trade. So if we come down into that lower zone of support, if we have good price action, we just play calls and we go from zone to zone. If we come down below that zone, retest it as resistance, we play puts and just trade it from zone to zone. So today's a very simple day on both the SPY and the Qs. You got 4 daily zones of support resistance. You're going to wait for the market to open, wait for the stock to get to one of these zones, read price action, and then find yourself on the right side of the trade. It's pretty simple. If you have good price action at resistance, and price action is showing you there's clearly more sellers than buyers at resistance, that's when you take puts, because there's a higher probability chance that price falls to the downside. So just wait for the stock to get to the zone, read price action correctly, assess the trade, and just rock and roll. It's a very simple day today, guys. I think we're going to be more or less kind of range bound like we've seen the last 2 days, personally. We were pretty much range bound on Friday and pretty much range bound yesterday as well. We have CPI data tomorrow. We have PPI data on Thursday. And then we have Michigan consumer sentiment data on Friday. So I don't really see the market making any kind of big move today. I would expect it to be more sideways and range bound like it's been Friday and Monday. Then tomorrow we get CPI. We'll see some volume move in. That's when I expect to see some bigger moves. But I just don't really see that taking place today on the SPY or the Qs. I would expect this to remain kind of sideways, range bound until tomorrow morning, 8:30. Unless China traded. That's a good point. 100%. Yeah. Investors are awaiting the details on the U.S.-China trade talks that are currently in progress. So, I mean, anything could happen today. We can get some new information on that. Trump could tweet. We could see the market move big, 100%. But let's say we don't get an update on the U.S.-China trade talks. Let's say Trump doesn't bring his Twitter fingers out. We'll probably sit sideways leading up till tomorrow. But there's a lot pending right now, and there's a lot of things that could hit the wire, man. So we are dialed here on the SPY and the Qs. But I do want to talk about a few other stocks, all right, before I start looking at your individual stocks as well. So Tesla today. I want to keep an eye on Tesla because we're coming up into a daily gap. So if we come up and fill this daily gap up around 331.92. I want to play puts back down to like 322.51 for a gap fill rejection here on Tesla. So this is what that gap fill rejection would look like. Tesla comes up, gets inside of this daily gap, and then simply comes up and fills the daily gap all the way up around 331.92. We come up and hit 331.92 and we fail to push higher, and we clearly see there's some sellers stepping in. I want to play puts back down to 322.51 for a gap fill rejection. So it's a simple setup. Identify the daily gap, wait for the stock to fill the daily gap, and then once we fill that daily gap intraday, just take the short off the top of the gap and play it back down to the bottom of the gap here on Tesla. So Tesla looks good today. Definitely need to have that one on watch. Just get into your daily time frame and go mark up that daily gap from body to body, and let's see if we set up and fill that gap today. So that's Tesla. Looks pretty good. They got AMD as well. There's a couple things with AMD that stands out, and I like AMD a lot for some possible puts today. So let's break down AMD and let's really talk about what we have and why this setup looks really good. Right, so we have this daily zone of, I'm sorry, it's not daily, it's monthly. So we have this monthly supply zone right here. So we have this nice drop on the monthly. We have this nice base, and then we see a gap down drop on the next monthly candle. So we have a nice little monthly breakaway gap, right? We have an impulse that's 2 times greater out. That's a nice move to the downside. That's a nice supply basing candle. So we got some monthly supply here on AMD. Then we drill it down into a weekly time frame on AMD. And what else do we see on AMD on a weekly? Well, we see we have this weekly supply zone from the week of January 21st, right? We have this nice little rally, base, drop, and we even have this nice gap down on the weekly as well. So let's go ahead and mark up our weekly zone of supply. And what are we starting to notice? Well, we have that big monthly zone of supply, and we have the smaller weekly zone of supply that's sitting inside of that monthly zone. So we got 2 zones on top of each other. And then we go finish this bad boy up on a daily time frame. So now we're going to go ahead and flip this down into a daily and see what else we have. Well, this is what we got on the daily. We got this little daily gap to the upside. And so that gap was created back from January 7th into January 8th. We had this nice little gap to the downside. So let's go ahead and mark the gap up. Where's the gap? It's from 125.25 to 126.92. That's the daily gap. And then take note of where your 200-day moving average is. Where's your 200 SMA? Well, your 200 SMA is sitting right around 125.15. So start to just mesh all of this analysis together. And what do we start to notice? Well, we have 200-day moving average resistance at 125.15. The bottom of this daily gap is at 125.25. The top of weekly supply is at 125.25. And that's also right pretty much in the middle. Not quite in the middle, but it's inside of that monthly supply zone. So we have a lot that suggests getting short at 125.25. 200 SMA resistance, bottom of the daily gap resistance, the very tippity top of monthly, it's actually weekly supply, tippity top of weekly supply, where we expect there to be some unfilled sell orders still pending and still present. So we're starting to paint this nice vivid picture of, hey, there's a really good trade possibly setting up on AMD to the short side based on the analysis that we've done. So then we go ahead and just drill this down into a lower time frame, and we see where we're currently at. Well, right now we're at 122. We know the best of the best short is going to take place up around 125. So if we see AMD push on up to that 125 level, we hit the 200 SMA, we see it's being respected as resistance. We hit the bottom of the gap. We see it's being respected as resistance. And we start to see price react, suggesting we're taking out some unfilled orders. I want to be looking to place some puts on AMD up around that 125.25 today. So that's going to be the short plan on AMD, is playing puts if we get up to that 125.25 level. So AMD looks really good today. That needs to be on your guys' watch list as well. And then we have a couple potential swing trades. We need to see SMCI continue to develop a little bit, but I do like the daily structure that we're starting to see. We saw this nice break to the upside, right? We have a clear break over these prior highs. So this is a valid daily leg to the upside. So this is your first leg up. This is your retracement off the first leg. And we see we're building some really nice daily structure to start to pop and see that second leg to the upside here on SMCI. So the objective is to really dial this in to see where is the best of the best entry going to take place. You know, in hindsight, down around 39.10, but right now we're up around like 43 bucks. So we're not getting entries down around 39.10. But the goal is to dial this in further and see, hey, where's the best area to get in to capitalize on this move to the upside to catch the second leg. So it looks pretty good. There's a lot of confluence that we have with SMCI, but today that's the objective, guys. In the Zoom sesh, we'll pick up our SMCI and get an idea of where the best of the best entry is going to be at and see if we have good risk reward. And if so, I think SMCI looks really good for a swing trade up. And even if we just get a measured move, right? If we just measure the move of the first leg and say, hey, are we going to get a measured move second leg? That gives us an idea of, again, where we could see the move finish on out. And so that suggests a move up towards around like 56 bucks if we see a 100% measured move on that second leg. So realistically, that puts you up into a lot of resistance as well. So that makes a lot of sense. So realistically, you can expect to get maybe like 12, 13 bucks to the upside. And even if you throw stops underneath this retracement low, which is still a lot of risk, you're risking like $4 a share, you're still going to be able to bang out a solid 3-to-1 risk reward. And this is a trade that could play out in the next couple of weeks for a swing trade. So SMCI looks really good for a swing. I say there's an 80% shot that we get that second leg move to the upside, and that target puts you right around like 56 bucks. So SMCI looks really good. And then finally, we got Disney as well. And so Disney is coming up into a couple key levels. If you take Disney down into a monthly time frame, we have this monthly supply candle, right? Flip Disney down into a weekly time frame, and then you see Disney has this weekly supply. Now, yes, the weekly supply has one hit, but it's still a higher time frame zone to where I'll entertain the second and even sometimes the third hit off of like a weekly or a monthly supply demand zone. So we have that weekly supply. It's got one hit, but if you take that back down into a monthly time frame and see where that monthly zone's at, we are just now pushing up to the top of that monthly zone. So if we see Disney get up into that overlap, right? And that overlap is between 116.73 to 118.58. And we see price get into that zone and we start to see price falling out like we saw here, where it's like we hit that zone, we start to flip red on the day and we see some selling pressure. I definitely want to be looking to get short on Disney up around this 117 to 118 level. Ideally, that's the sweet spot to get an entry here on Disney. Target, we're going to target this daily gap to the downside. And this is going to be a 2 to 4 week long swing trade, in my opinion. So again, keeping it simple. If price comes up into that supply overlap and we start to see price falling to the downside, I'm looking to make my entries as close to that 117, 118 level as possible, putting stops above that weekly, monthly supply zone. And my target's going to be back down in this daily gap, which puts you around 106, 107. So we can already see that this is going to be a really good, low risk, high reward setup. So you're risking probably like $2 at most, and your target's going to run you about 10 bucks to the downside. So you're going to bang out a solid little 5-to-1 risk reward on Disney. So I like it. I think there's good potential. We're getting really, really close to that top supply zone. So I definitely want to keep Disney on high watch today and see if that sets up for the swing trade shorts. And so we're close. As you guys can see, we're pretty close. So this could very well be setting up today for you guys. Kevin, what's up, man? Good morning. Lee, what's up, man? It's been a minute. How you doing, dude? Yeah, so I took a peek at NVIDIA this morning, and I didn't really see a whole lot that stood out on NVIDIA, but we can go pick it apart, man. You thinking about a day trade or a swing trade on NVIDIA? All right, so if we're just looking at NVIDIA daily, actually, I mean, let's go ahead and just look at a monthly, see if we have any monthly supply demand. No. Anything on a weekly, again, we know there's no supply at all-time highs, but we still need to go in here and just mark up this little weekly supply candle. We just have to understand that we tread lightly with those zones of supply that are near all-time highs. So we have this nice little rally-based drop formation on NVIDIA's weekly. But we already see price came back up into some of that weekly supply, hit those unfilled orders, and popped out. So we have one hit right here. Come back up, hit those unfilled orders, pop out. That's 2 hits. Come here, hit some of those unfilled orders, pop out. That's 3 hits. So we see about 50% of that weekly supply zone has been hit at least 3 to 4 times. So I don't really expect there to be any unfilled orders left over because prices come up 1, 2, 3. And again, we're sitting there right now this week as well. So if there are any unfilled orders, I would say they're going to be where price has yet to go inside of that supply zone. So let's go ahead and just readjust that supply zone up over all of these highs. So again, price hit some of that supply, popped out. We don't want to keep that zone down here. We want to make that adjustment and only look at the area where price has yet to go. So we still have some of that weekly supply, but remember, we still want to tread lightly with it because that supply zone sitting near all-time highs, and the rule of thumb is there's no supply at all-time highs. We're going to make that adjustment for that reason on NVIDIA. Then we're going to go flip this down into a daily. And what do we notice here just over the past couple of trading sessions on NVIDIA? We keep coming up into that weekly supply and popping out. Hitting that weekly supply, popping out. Hitting that weekly supply, popping out. So we still see there's a lot of unfilled orders resting up at that weekly supply zone. Every time price comes up, price pops out. So those orders are getting hit. And then we have a daily zone of resistance between 143.46 to 144.40. So we look left, we see we've hit this level many times in the past. A lot of resistance, turn support, turn resistance, turn support, turn resistance. And again, for the past 2 weeks, we've been topping out at that daily zone of resistance, and we know that we still have that bigger weekly supply zone. So I'm already looking for possible shorts right off that zone of resistance, right off the bottom part of some of that weekly supply, because we clearly see price is having a hard time getting through that level. So we know where we would ideally like to get short and play puts, but where's the target? I would say back down into this little weekly gap or this daily gap that we have on NVIDIA. So let's go ahead and mark up this gap from body to body here on NVIDIA's daily. So bottom of the gap is going to be down here at 137.39. And then top end of the daily gap is up here at 138.78. So we already know where a good target would be if we play puts and get short on NVIDIA. It's going to be down inside of this daily gap. And we have a really good idea where we want to be playing puts in the first place. Let's take NVIDIA down into a 4-hour time frame, and let's see if there's anything that stands out on a 4-hour. No. I mean, you got some divergence, some bearish divergence forming on a 4-hour time frame. Do you have any divergence on the daily? Yeah, you got some bearish divergence on the daily. So check this out. You see how the RSI is making lower highs, but you see how the stock's price at the same time is making higher highs? That's what you call bearish divergence. It's where the RSI is making, say, lower highs. Meanwhile, the stock is making higher highs. And when you see bearish divergence into a key zone of resistance or supply, that's a really good indication that you can start to see a short-term reversal on the stock. So we have some confluence with the RSI. We see some bearish divergence that's taking place and forming as we're getting rejected off supply and off that daily zone of resistance. So that's another confluence to want to play puts on NVIDIA. And let's go ahead and flip this down into a 1 hour time frame. Is there anything that really stands out on a 1 hour? There is not. Let's go finish this up on a 30-minute time frame. Do we have anything that really stands out on a 30-minute? We do not. But here's going to be the plan for today on NVIDIA. Ideal entries will be right around 144. So ideally, getting short at 144 is the best place to be getting short. Why is that? Well, it's sitting right at that daily zone of resistance, and it's sitting right at the bottom part of that weekly supply zone. So if we're going to get short, it's going to be right around 144 because that's the area where we can see we have the most confluence to where we can see that short on off. As far as target, where do you want to put your target? I would say down at the top end of that daily gap. So right around like 138.80 would be your target here on NVIDIA. Stops, you would want to go ahead and just place your stops above yesterday's high a day. So yesterday's high a day was at 145. You want to put stops 5 to 10 cents above 145. So this is what your plan would look like on NVIDIA. Entries at 144, stops above yesterday's high a day, target the top end of that daily gap. So what's your risk reward on NVIDIA? It's about a 4 to 1. So if you get positioned to lose no more than $200, you've got potential to make 800 plus on this trade. And I think this is a better swing trade than day trade. I honestly do. It's not going to come down to 138 today, but maybe by tomorrow or Thursday, we could definitely see it down around that 138 level here on NVIDIA. And it very well could play out today. It very well could. I mean, look at last Thursday. It went from 144 down to 138 in one single session last Thursday. So it's possible you see that solid $6 drop to the downside today, but I would still get position going a couple of weeks out on some puts because this honestly could be a good-looking swing trade to the short side as well. That's NVIDIA, man. I think there's some good potential to get short at 144. I mean, that's what I see. I mean, if I see this setting up at 144 to the short side with good price action, yeah, I'm going to get short at 144, stops over yesterday's high a day, and look to swing this down to like 138 here on NVIDIA. Because again, you have 3 things that suggest getting short. You actually have 4 things that suggest getting short. Do you have anything that you see that suggests getting long? I don't see anything that's like, oh my gosh, I got to get long here. This is a good looking long setup. As I go through my analysis with no bias, I just naturally start to see more reasons to get short, right? Weekly supply, unfilled orders left over. That's one reason. Second reason, key daily zone of resistance that we've clearly been topping out off of, right? Over the last couple of weeks. There's 2 reasons. We see good price action on the daily off that zone of resistance. So we have good price development, good price action off that zone. That's 3 reasons to get short. We see more sellers than buyers present. The 4th reason is we have bearish divergence that suggests we could see a reversal off this daily zone of resistance. We have some bearish divergence. So I've got 4 separate reasons that say get short because there's a high probability outcome of it dropping to the downside. I see nothing based on the technicals that says, hey, get long. So high probability setup to play it short off 144 down to the top of the gap. So yeah, puts, most definitely. I would be putting my money behind puts. So that's NVIDIA, boss man. But again, your confirmation on the trade is going to have to be price action. So price needs to come up, top out at that level, and you have to clearly see there's more sellers than buyers present at 144, right? When I say price action, just read price action. If you come up to that 144 level and this is the kind of price action you see, clearly there's more sellers than buyers. That's what you want to see off that key zone to feel confident to play the short, because you clearly see there are more sellers than buyers. So you want price action to validate the trade. If you just run straight up into 144 and you don't have price action, like suggesting the short, stay hands off, because you could easily pop through it and break through it. You need to have great price action setting up and developing off that zone. That's going to be the validation to go ahead and play those puts. I see a big flag forming on what? On NVIDIA? We're talking about any kind of flag. It depends on the time frame you're looking at, but I don't see any kind of proper valid flag formation. So I see one here where we have this nice impulsive move to the upside. We have this leg up followed by a period of consolidation followed by the next leg to the upside. So there was a little bull flag on the daily time frame, which I don't trade retail formations. I don't do analysis like that. I'm not looking to trade bull flags. I'm not trading breakouts. I'm not trading cup and handle formations. They're just very low probability setups. But do we have a visual flag formation on the daily? We do, and we saw the pop to the upside. But in this region here, it's like leg up consolidation and a slightly downward move. I just don't see any kind of flag setting up here. And even if I did, I still would play the short because I have higher odds of getting short based on the analysis that I've done compared to getting long inside of a bull flag, for example. There are, yeah, dude, there's about 8 ways to trade a gap. There's 8 different ways that we can trade gaps. Just about, man. Apple. Yeah, we can go look at Apple real quick. I can already tell you I'm not a fan of Apple because it's just been sitting sideways for, geez, like 2-3 weeks. It's been stuck sideways. But what do we notice? Like, we're topping out. Like, we clearly have this area of resistance that we're just having a hard time getting above. So we know there's going to be some key level right around like 206 on Apple. So let's just go ahead and see, do we have a key daily zone sitting here around 206 where we've been clearly topping out over the past few days? It literally is just a zone of resistance that's just been established over the past couple of days. So it's not like I have this key area, I look left, and I'm like, oh my gosh, this zone's been hit a bajillion times. It's only been created just over the past 3 days of price action up around 206. So you got some 206 resistance, and a lot of that's because we have some of that daily supply sitting right there on Apple. So it's a smaller little supply zone, but it is a daily supply zone. Why is that? Well, we have a drop, base, drop. We see the gap down, the drop. We see a day where we based. Then we see the gap down drop. So you got a little bit of that daily supply sitting right overhead. We got this little zone of resistance between 205.72 to 206.27. Clearly been topping out the last few days. And then what do we have to the downside here on Apple? Well, we do have the rest of this daily gap that we could fill. So we had this gap from May 23rd into May 27th, but you see how price already came inside of the gap? We just need to go ahead and readjust the gap level. So I'm going to drag the top of my gap down and only look at the area where price has yet to go inside of that initial gap. So we do have this daily gap. Top of the gap's at 196.77. Bottom end of the gap is sitting here at 195.32. So we got this daily gap. We have that key zone of resistance. And we have some of that daily supply sitting right overhead. Is there anything else that stands out on a daily? I mean, honestly, no. I mean, overall, we've just been sideways for the past couple of months. So price, development, and movement on the daily is pretty subpar on Apple. I'm not a fan of trading inside of like channels and ranges when I see the stock just congested sitting sideways on a higher time frame. But there's a couple things that we see. Resistance, supply, lower gap. Where is Apple at today? Pre-market sash, we're sitting at 201.05. So here's all you could really do on Apple. You got like two different plans. Plan number one, if we come back up to that 206 zone and we top out off that zone and we clearly see there's still a lot of sellers present, we just play puts off 206. Well, let's say we come down into the daily gap and we fill the gap at 195.32. I would just play calls for a gap fill bounce down at this 195.32 level and play the calls and see if we get that nice little gap fill bounce. So Apple looks, it's decent. I mean, there's some potential. It's worth keeping on watch, but we're still kind of far off, right? You got 5 points to the downside before you even consider getting long, and you got about 5 points to the upside before you even consider getting short. So you're sitting in the zone of uncertainty. Like the zone of uncertainty, you're just at a random level on Apple. So there's no trades like really going to set up here at around $200. You got to be hands off until you get towards around 206 for the puts, or be hands off until we come down and fill this gap around 195 for the calls. Don, what's up, buddy? Good morning, man. So a zone-to-zone bounce, not on Apple. It'd be a gap fill bounce. So come down to 195.32, fill the gap, and play calls intraday for a bounce. I would play it back up to like 196.77. So it'd be a short-term day trade. And you would look to catch this long at 195.32 and play it long to 196.77. You would catch about a $1.50 move out of Apple. So you'd be literally looking to scalp this for a day trade. Probably something that you'd be in it for like what, 15, 20 minutes tops. So quick base hit, quick day trade for a gap fill bounce. Yeah, Tesla looks good for today, 100%. So Tesla, I want to play puts at 331.84. So if we come up and fill this daily gap at 331.84, I want to play puts back down to 322.51. So this is what my plan's going to look like here on Tesla. Entries, 331.84. Entries. Stops right above the top of the gap. So you're talking maybe like $1.50 of risk above the top of the gap. And then your target's going to be the bottom of that daily gap. So we can see entries at 331.84, target at 322.51, stopping out above 333. Stops are at like 333.25. You can bang out a simple, easy, about 6-to-1 risk reward. So if you get positioned to lose $200 on this trade, you have potential to do what? $1,200 on this trade, profit, and only put on $200 of risk on that 6-to-1 setup. That's Tesla. It's top of the list today. Looks really good. Yeah, brother. Absolutely, man.